Advance payment of tax, deduction of tax at source. These two are another important aspects for filing of income tax return. Before filing of income tax return, advance payment of tax we need to understand, and how TDS is already deducted need to understand. When you are making the assessment of tax, which we have already studied in previous session, advance payment of tax and TDS, that is tax deducted at source, need to be understood. After 1995, the changes in the Income Tax Act, every person who are paying, not receiving, who are paying income tax need to be deducted tax in the view of tax receiver, taxpayer, maybe that is income earning person. In the place of income earning person, the income payer should be deduct the tax. This is the obligation made by the income tax department after 1995. Let us see advance payment of tax, what exactly and what are the important concepts. In this, tax paid in the installment before the end of the financial year. Generally, whenever income is earning, whenever income is generating, we need to pay tax. That is minimum understanding and minimum procedure. Once you are calculating first 3 months, maybe if it is take financial year, April, May, June. So, this financial year will start from 1st April, May, June, first quarter. As per the income tax provisions, the business people and other persons have to payment the tax in advance before completing the financial year. Once in a 3 months, you have to pay tax. That is the provision as per the income tax. Whenever income generating, immediately you have to pay tax. So, that tax in generally 4 installment when you are paying advance tax. So, this is compulsory provision. That means, no need of waiting until completion of financial year. So, what is this financial year? Whenever income generating, whenever income earning, whenever income accounted, these are all situations. Income whatever is generated, definitely we should be calculated tax and we should be make the payment. So, that is called advance tax. Not only that, if any person is making their own income levels like salary, house property, business and other things. So, these are all income sources. Sometimes whoever is this income paid by the person, then that person has to be deducted tax and the remaining balance will be given to the assessee. That deduction is called TDS, tax deducted at source. This is compulsory obligation made by the income tax department. This is the modification done in the finance budget. So, as per that, before calculating the income, whatever advance taxes you have paid need to be reduced. Then once you are reducing from the tax payable, a remaining amount you have to finally settle before filing the income tax return. So, only small information which you can understand, advance tax is no need of waiting till completion of that particular financial year. You have to pay your taxes before the financial year in maybe 4 installments. These 4 installment generally once in a quarter. You might have seen in the sometimes media, maybe television, maybe newspaper, it was advertising and it was cautioning by the department that you have to pay your advance tax periodically. If you are paying periodically 4 installment, you will be get free from that particular tax liability. That is the reason every person need to understand what exactly advance tax. Once you are earning some income from different sources of income, like particularly business and profession, then definitely you have to make 3 months, once in a 3 months calculate approximate income. On that, what is approximate tax you have to calculate and you have to pay within that 3 months. Then if you are doing like this, once in a year 4 installment tax will be remitted to the government income tax department, so that your liability will be reducing, not like lump sum figure, it will be under different installments. That is the advance payment of tax. Generally, these type of taxes is paid by the business people, and for salarized and for house property income, maybe tenant is paying your rental income and other source income, capital gain, these are all generally is deducting tax, TDS. Whoever is paying a rent amount, the tenant has to be deducted the taxes, that is called TDS. Sometimes when you are selling some real estates, when you are selling from some big estates like building and maybe sometimes lands and buildings and gold ornaments or something, when you are paying, when you are selling, definitely. So, that amount how much you are selling, the difference of your original amount will be treated as income. That capital gains once in a lifetime of the property generally we are selling. So, that property taxes will be made deduction of TDS. So, except business, remaining all we can treat as tax deducted at source in different sources of income, that is house property, business, capital gain, other sources. These type of income will be having advance tax and TDS. Let us see what are the applicability requirement if taxability and what are the exceeding amount and all these things. Generally, the TDS will be deducted whenever this amount exceeds 10,000. If your income is exceeding, if your income is paid by somebody with 10,000, definitely TDS has to be affected. This is general conditions, and specific conditions according to the different provisions we need to be discussed later. And advance tax payment will be having some schedule time and some criteria to make the filing of returns, advance tax payment returns. Sometimes this is a proposed tax calculation and the proposed tax which was already paid should be submitted to the income tax department, so that progression of tax will be calculated. Not exactly written, the particulars what you are calculating, definitely progressive return. Then 15th June is the date which 15% of total tax liability will be made. Generally 15th of September 45% of total income, on that whatever tax calculated will be remitted. So, this is all different quarters, because once April, May, June completed. So, June 15th before completion you have to make your advance taxes. Not only that, 15th September is the second quarter, definitely we have to make that second installment of advance tax. 15th December is the third installment which advance tax may be remitted. And last quarter, that is fourth quarter, 15th of March, advance tax will be paid by the assessee. These are all different installments, 4 installment which advance tax can be made by the business people. Not only that, interest on late payment of advance tax. If you are not following this June, September, December, March due dates for making of advance taxes, it will be affected interest. This interest generally we are calculating under section 234 A and B of Income Tax Act 1961. It reflects interest on late payment of advance taxes. This is generally on the income of business. The section 234 A interest charged for the late filing of the return where tax is unpaid. So, within the time if you are not paid tax, this will be reflected. This is first point. The second point, the section 234B, interest charged if 90% of tax liability is not paid by 31st March. So, your progress of income, progress of tax should be calculated. So, if 90% of tax, if you are not paid before 15th of March, you will be paid interest under section 234, because if it is less than 90% or if it is within the time frame, then you have to pay taxes with interest. And section 234C, interest for different deferred installment payments. If you are not paying exactly according to the quarterly amount, definitely you have to pay tax under section 234 with interest. Not only that, let us see what are the TDS importancy after completing the advance taxes. What is the background of TDS? It was introduced, TDS is mechanical and compulsory, mechanized, introduced to collect the tax at the source of income which was generated by that particular year by the assessee. The background of introducing the TDS, it was comes from 1961 under the Income Tax Act, ensures timely tax collection. It is a provision. 1961 Income Tax Act is giving the timely payment is very systematic progress of taxation. Then definitely every assessee has to check how the income tax is paying as per the advance tax rules and TDS rules. This is a provision in the Income Tax Act 1961. Not only that, if you come to the definition, the tax deducted at all the sources, income are remitted to the government within the time frame is called TDS. This is one of the important aspect. Then applicability of employers, this will be, and business people and also individuals, and making specified and payment which are relating to that particular year, which are relating to that particular source of income, it will be calculated TDS. Not only that, we have TDS sections, rates and ceiling limits. We have to check into this. This is one of the important matter. When you are making the TDS, whoever is deducted the tax behalf of the income generating person, he has to make this TDS properly to filing the income tax department, and that is very important aspect which we need to understand. According to section 192, salary as per the applicability of income to make taxes according to the slabs, we have to file the income particulars. Then section 194, the interest other than the securities, the 10% of interest exceeds 40,000 rupees for banks and others 5,000 rupees can be calculated. This is about the second aspect of TDS. Section 194C, the contribution which 1% of individuals or HUF, 2% others, if payment exceeds the 30,000 rupees and also 1 lakh annually should be made these percentage. Not only that, we have section 194H, commission, brokerage for the business people and individuals with 5% off if payment exceeds the 15,000 should be calculated. And we have section 194I, rent, 2% of income and also 10% of land and building. If rent exceeds 2,40,000, then per annum should be calculated. Then section 194J, professional fees, that is 10%. If payment exceeds 30,000, it has to be calculated. Then section 194N, cash withdrawals exceeding 1 crore should be paid 2% of that particular income exceeds 1 crore. Then section 194O, e-commerce transaction, that should be calculated 1% on transaction exceeds the 5 lakhs rupees. These are all different categories of transactions which we can calculate the TDS based on that particular rates with the sections. Let us see TDS return filing and due dates. Whoever tax collecting from the income generating person, the collected person is the responsible under the TDS rules. He has to file the TDS particulars on behalf of the taxpayers, because he was already collected TDS from the taxpayer. He has to be file the income tax return about the taxpayers. Then in this we have quarterly TDS returns are there. He has to file every quarter ending 3 months, once in a 3 months he has to file the TDS returns according to the form 24Q for the salary persons, form 26Q non-salary person, form 27Q also for NRIs. So, this is different forms for filing of TDS returns. On behalf of the taxpayers, tax deductor has to file these forms on behalf of the tax earning person, tax income earning person. Then due dates for this TDS, first quarter 31st July and that particular assessment year, this is first quarter. Second quarter 31st October and third quarter 31st January and last quarter 31st March before completing the particular financial year. These are all the important due dates for filing and making of TDS returns. The consequences if you are not paying or if you are not following the rules, non-compliance, what are the consequences? We have a lot of penalties, procedures, fines and everything. Sometimes these are comes under the civil laws. If intentionally the person are proved that intentionally not paying, not following the rules, sometimes it will be converted from civil case to criminal case. But anyhow, the primary object, what are the important punishments and consequences, let us see for the rules. Then penalty for the late TDS payments will be 1.5% per month. This should be calculated under section 201 subsection 1A. This penalty should be calculated. Then second point, penalty for the late filing of TDS return is 200 rupees per day under section 234E. This is also another important penalty. Let us see prosecution for non-deduction of TDS, section 276B, the imprisonment up to 7 years. As I am already mentioned, it will suit as a civil case, sometimes it comes to criminal case, but now it comes to the Civil Cases Act. We have civil laws and criminal procedure laws. These two we have to be calculated for income tax purpose also. So, we can conclude some of the important points as we have discussed under the advance payment of tax, deduction of tax at source. Let us understand what exactly these two before completing. Filing of income tax return, ensuring compliance and financial disciplines. Advance tax helps in the different stages, payment of avoiding interest and penalties. This is very important, and it will create some financial discipline. TDS simplifies tax collection, but it requires timely deduction and timely filing of TDS return. And also we have tax loss, as we have already mentioned, then avoids some penalties and legal consequences. Now, that is the reason we should understand what exactly advance payment of tax, what exactly deduction of tax at source. And this, if you are doing properly in time, calculation properly, then this will give you lot of discipline for your own calculation of tax and payment of tax within the time. So, not only a big task of calculation, making all these procedures, but this theoretical aspects also is very important. Everything you made yourself, everything settled before leaving your house, but sometimes you are missing to lock the door. The same thing, everything people are following sometime, everything they are taking all the precaution, but making of this advance tax and the return of TDS is sometimes missing by the tax deductor and missing by the taxpayer for advance tax. So, that is the reason definitely the people need to understand, particularly assessees, this particular financial discipline will give you lot of understanding of tax rules and regulations which comes to every individual for their tax liability. And this could be the important role where income tax is asking every assessee to maintain the rules and regulations which are very easily understood by every assessee for making their tax procedures. So, we have understand very clearly what exactly advance payment of tax, what are the legality made by income tax department, and tax deducted at source TDS and deduction of tax at source, both in different cases taxpayer and tax deductor we have understand. And these 2 points if you are following, definitely this is the major aspect of making your tax discipline. Advance tax we have understand and deduction of TDS we understand, tax at source. The tax at source, if you please understand each head of income, if you understand from the first head of income, that is salary income, every individual in India, definitely the people are, most individuals, most assessees are working for salarized income. As we know, the definition of salary 4 parts: employer, employee, service rendered by one particular benefits. So, for employee is providing job opportunity to employee, employer providing job opportunity to employee, and employee rendering services to employer. For that, employee is expecting some benefit, generally monitoring way it is called salary. In this salary, employer should have to be deducted tax. It is a responsibility of employer. So, is income payer, not income receiver. Income payer responsibility to deduct the TDS. This particular head everybody should understand. Employer having responsibility of deducting tax is major thing. Not only that, once he is deducting the tax, he has to file the TDS return. Some cases, Commission of Income Tax and individuals and some other situations we can understand, the employer deducted tax, but he has not remitted to the department. This is one case. Employer deducted tax, but is not remitted within the time. Of course, he is remitted, but not within the time frame. So, this is one particular important issue for the TDS. So, this TDS, when relating to the income of salary, definitely we should understand the way it is a responsibility of employer to remit the tax to the income tax department, referring with employee's PAN number, so that income tax department amount will be credited to this particular assessee's PAN number, permanent account number. This is one head of income, salary. Let us see house property. Generally in India, the most of the people are getting after salarized income is next income is income from house property, that is rental income. Of course, but rental income we can see our surroundings, how many tenants are deducting the tax. Of course, sometimes not, but as per the Income Tax Act, every tenant whatever rent paid to the house owner should be deducted the tax. And this cannot be happened sometimes, but most of the big buildings, sometimes house given for let out of some bank, some organization, generally they are deducting the taxes. So, now here the tenant, whoever is paying income tax, should be deducted TDS, then remaining rental amount will be given to the house owner. This is the second head of income. So, this TDS amount, whoever is deducted is having a responsibility of filing of TDS returns. He has to refer the PAN number of house owner, and he has to file the TDS return, and he has to remit the money. This is the responsibility. If it is done, the assessee whatever TDS made by the income payer will be calculated his own income after making all this TDS and advance taxes. This is the practice. This is second head of income. Let us come to the business. As we have already discussed, business is made all advance taxes quarterly paid himself, business person, owner, maybe the assessee, maybe the business person who is organizing this type of income. Definitely he has to make his advance tax, because in the business no employer, no employee. You are the business entrepreneur, you are the owner of the business, you are doing yourself self-employment. Like it's a business, definitely the business concern will have their own liability of payment of tax, or it is called advance tax in the case of proprietor. In the case of partners, in the case of companies, the company, as per our fundamentals of basic concepts of income tax, assessee is 7 categories. Under that, the company also one of the assessee, artificial person. So, that company also himself has to pay tax. So, that is comes under advance taxes. Out of 5 heads, salary TDS already discussed, house property TDS we have discussed, business advance tax we have discussed. Let us come to the fourth category. That fourth category is capital gains. In the capital gains, when generally this will arise? When there is a property exchange, means the building selling, plot selling, ornament selling, machinery selling, valuable vehicles selling, these type generally capital gain will arise. Whoever is purchasing this particular assets, then he has to pay some money to the seller. Whenever he is paying some money to the seller, he has to be deducted TDS. The purchaser of properties need to be deducted TDS from the income of seller. Once it is deducted like this, he has to file the TDS return according to the framework what we have discussed, according to the time, according to the form, he has to be file the income tax return. In the case of capital gains, maybe the person may be variant, he may be individual, he may be HUF, he may be firm, he may be company, he may be any other person, but calculation of TDS is same. He has to calculate TDS, he has to file the return in the case of capital gains. Then let us come to the last source of income, that is income from other sources. As we know, graduation level we understand what is income from other sources. Income from other sources may be unexpected income, unwanted income, lottery income, games income, and fluctuated income. And these times a lot of games, maybe TV games and other games and other unexpected lottery ticket. So, sometimes these type of income may be possibility. For this income, whoever is paying, that person has to deduct the TDS and the remaining amount should be given. Let us take one example of TV game, Kaun Banega Crorepati. In this, definitely whatever amount is winning by the person, TDS will be deducted and remaining balance will be paid. So, all these cases TDS returns will be filing. So, this is one of the important examples for each head of income, how TDS and advance taxes will be calculated. Thank you.